You know, it's the world's greatest free market in capital, and 85% of the Bitcoin, notwithstanding all of the corporations that have been acquiring it that people talk about, BlackRock and Strategy get all the publicity, but 85% of the Bitcoin is held in crypto OG hands. We can't even identify them. And I talk to the traders, they say that, the derivatives market, the perpetual market drives this much more than spot, which means that $1.7 trillion worth of capital that can be 20x or 30x levered is held by people that we don't know. And so I think that that in the near term, their moods and their drivers drive this market. And I guess that's the beauty of free market capitalism. But I think that the more important point is the last 12 months have been probably the best 12 months in the history of the industry in terms of fundamentals. And it's profound what's happened since December.
What would you put at the top of the list there? I mean, I know we've had changes in regulatory environment, different types of institutional adoption. What stands out to you the most?
Well, let's tick off the highlights of the last 12 months. You have a universally supportive administration, a supportive head of the SEC, supportive head of the CFTC, supportive head of the Treasury, supportive president, supportive vice president. You have David Sachs, go out publicly and say, Bitcoin is a digital commodity, it's digital gold, it's an asset without an issuer. We recognize its special nature in the world, as a technology to propagate property rights and freedom. That happened in March of this year, right? People forget how that developed. We saw the spot Bitcoin ETFs get uncrippled. We had in-kind creates and redemptions. People can now swap their Bitcoin for IBIT type shares and borrow against them and then swap back. That was a big deal. We saw the onshore derivatives market for IBIT get uncrippled. It went from nothing to 10 billion. And then when they actually took the cuffs off, it went to 50 billion. That's a big deal. We saw guidance from the CFTC just last week. You can now trade spot crypto assets like Bitcoin on regulated commodities exchanges in the US. You'll see them start trading on the CME. We saw guidance that you could start to use Bitcoin as collateral, right? Crypto assets collateral against those derivatives contracts and trading contracts. That's a big deal. We just saw guidance from the SEC that it's possible for the DTC to tokenize their entire security portfolio. We're talking all the securities in the world moving on the DTC. And the fact that that guidance came from the SEC was a big deal. But the fact that the CEO of the DTC got on X and put out a video saying they're enthusiastic about that was a big deal. We saw favorable guidance come out of the IRS and Treasury that made the entire issue of unrealized capital gains tax on crypto assets go away. That's a big deal. We also saw the creation of the digital credit market. My company, started issuing digital credit instruments, and we did an IPO. I guess it's like late January, early February. Then we did a second, a third, a fourth, and a fifth. We did 5 IPOs of digital credit instruments, and that entire market went from nothing to $8 billion in 10 months. And we're pioneering this public digital credit market, but we also saw now an avalanche of conventional banks. We saw guidance, positive guidance from the OCC and the FDIC probably every 2 months for the year, like six salvos. And after the sixth salvo, we started to see the entire dam breaking and the banking industry thaw. And now, off the top of my head, I think we've seen pro-digital assets, pro-crypto, pro-Bitcoin announcements from Citi, Charles Schwab. Both have announced they're going to custody and extend credit on Bitcoin in the coming 6 months. We saw positive announcements from JP Morgan. We saw positive announcements from Bank of America. We saw positive activity from BNY Mellon. We saw, we saw Standard Chartered Bank and PNC Bank both announce agreements with Coinbase, taking advantage of their crypto as a service to custody and handle and trade Bitcoin. I think we saw clear guidance from the OCC that it's okay for banks to handle, hold, and trade and custody crypto assets on the behalf of their customers, right? So 12 months ago, you could barely get a loan against IBIT, right, and you couldn't get any credit against BTC. At this point in time, I think I can count off the top of my head 8 different banks that are offering credit against IBIT, normally in the range of SOFR plus 50 basis points to SOFR plus 75 basis points. And we can see probably 4 banks or more that are starting to suggest they'll move on to start to issue credit against the underlying BTC in the coming year. So that really represents the formation of the credit networks on top of crypto assets. So public credit, banking credit, right? Those are big deals. We also saw the first credit rating. S&P gave us a credit rating this year, and that's for the first time ever. And, I remember when we announced we were buying Bitcoin for our balance sheet, our insurance company dropped us. We couldn't get D&O insurance.
Wow.
And we couldn't get it it was like 3 or 4 years, and they finally unwound that. So I'm not underwriting the D&O insurance for my own company anymore. So, that's a bit of a win. So insurance, I'm not saying we have full-throated insurance acceptance. We surely don't. But what we see, and I left out, the other obvious thing, which is we got fair value accounting.
Yeah.
Right. It was impossible to recognize a gain in a digital asset investment until the year 2025. And I guess beyond that, I guess I would be remiss not to note that I guess 200 publicly traded companies put crypto assets of some sort on their balance sheet this year.
Yep.
And we went to 200 companies that have Bitcoin on their balance sheet. So, and I guess last point, my company I think we raised $23 or $24 billion this year.
Yeah. I think you bought more Bitcoin this year than any year.
Yeah. And so I think if I was looking at the industry fundamentals, right, and you remember what we were talking about a year ago, right? You couldn't have predicted any of these things. If I had predicted all this, you would have said you're being too optimistic, and right. I don't think I would have been. I don't think I would have been ambitious, or aspirational enough to predict everything that happened. But I would say it's exceeded my expectations at a fundamental level across the board. We couldn't have a more favorable setup for global adoption and institutional adoption of digital assets in general. And by the way, I've been very Bitcoin centric here.
Of course.
And we went on and talked about digital securities. You're at the head of the SEC saying we expect that all securities will be tokenized on chain. That crypto task force was a big deal. The head of the crypto task force taking over the CFTC is a big deal.
Yeah, Mike Saylor, yeah.
Right. And I think the embrace and the success of digital currency, the stable coins, is a big deal.
Yep.
And I just got back from the Middle East, and I met with all the sovereigns and the banking regulators and all the digital assets innovators. And it couldn't be clearer to me that, as enthusiastic as we are in the U.S. about digital assets at this point, they're just as enthusiastic, if not more enthusiastic. And so I think we end the year with just a lot of things to be grateful for in this industry.
With that setup, what will be that you think? I mean, that's so many things that if you'd seen one of those headlines 2-3 years ago, you'd see a 20% candle or something on Bitcoin price. Like, what will be the catalyst then for next year with such a good setup? Is it just a matter of working through some of those, like you were talking about the free market, some of those OG sellers, or markets take time to change their tune? I mean, what's going to take us higher?
I think the drivers would be, my checklist would be, you watch the derivatives market and the way it forms, and that's the offshore derivatives market, the crypto native derivatives market, like, perpetuals, 20x perpetuals,
Yeah.
that forming onshore, that's a big deal. Cross margin, Bitcoin is collateral against derivatives in the United States on regulated exchange will be a big deal. So the formation of the commodities markets and the derivatives market and how we integrate regulated markets with offshore markets, I think that'll be a driver. I think the second driver will be the formation of the bank credit networks. When Bitcoin's 90,000 a coin and you're selling 450 coins a day into the market, that's like $40 million of natural supply.
Right.
And you worked it out and it's like, 16 billion a year or something of supply available from the miners. So $16 billion is a year's supply. Every time a bank creates $16 billion of credit, that's 1 year's supply taken out of circulation. So we're now getting to the point where banks like Citi and Bank of America and JP Morgan and Wells Fargo or Schwab, any of those can create that entire $16 billion worth of credit in 12 months. So you're watching the formation of major credit networks, and you're looking at a $2 trillion asset class that's been unbanked.
Mm-hmm.
And so as you watch the formation of banking credit, and corporate credit instruments on top of that asset class, that's going to be a big driver. I think the growth of digital credit, public credit, like STRC, Stretch,
Yep.
it's a big driver because in theory, you've got $300 trillion of credit. If you look at the credit markets, bank credit pays you nothing. Treasury credit or money markets, they're paying you 50 basis points in Japan and 100 basis points in Europe and nothing in Switzerland and 370 basis points in the US, and it's probably headed south.
Mm-hmm.
Corporate credit, junk credit, private credit, mortgage-backed credit, municipal credit. These things are all indexed to the risk-free rates in all those nations. So you look at the traditional credit markets, most people, what they'd like is a bank account that pays them 8% with no duration, no delta, no credit risk, right? That's what they'd like. What they're getting is a bank account that pays them 0 or a money market that pays them 2%. And then they're reaching for yield. And they're reaching for yield by accepting credit risk from a junk bond issuer, or they're going to go buy a 20-year bond they don't want. Nobody wants a 20-year bond or a 10-year bond. What they want is just not to lose their money, right? So the existing credit markets have a lot of very awful choices for people. Either you've got to wait 30 years to get paid and take 30 years of inflation risk, or you've got to bet on some going out of business junk bond, uncollateralized issuer, right? Or you've got to accept nothing and be happy about it. But I think the magic number is 4% better than everything else.
Interesting.
So if you're getting 0 in Japan and someone gives you 4% in yen or 1% in euros, you get 5% in the euro or 3% in dollars and you get to 7% in dollars. I think you've just created digital money, and it checks the box of, is it a medium of exchange? Yeah, sure it is, right? It's completely stable versus the world reserve currency, or against whatever you're spending in, right? The euro, the yen.
Mm-hmm.
Is it a store of value? Well, at the point that you start to clip to 7-8%, you're actually tracking the true theoretical monetary inflation rate, and you're outperforming the CPI. So regardless of what you think of what the true natural inflation is, the general public will perceive it to be a store of value.